So good afternoon. My name is Amy McIsaac, and I'm the Director of Member Services here at CPA Nova Scotia, and I will be your CPA host for today. Along with me will be Patty Towler, but I'll get to her in just a second. So directing your attention to the PowerPoint slide on your screen, for those of you that didn't hear me in the first time that I said it because you've arrived since, in order to award you your CPD credits today, I won't be doing an attendance poll. Instead, I will just be checking your names off once they show up in a report that I'll run later. So really what's critical is before we start doing the rest of the session is if you make sure that you have your first and last names recorded or shown up in your video screen. So if you don't see that in your video screen, if you just have a name like Owner or Kim or Bill, that won't help me figure out who you are for your CPD credits. So in order to change your name, if you put your cursor up to the far top right of your screen, there will be 3 dots in a little blue box. Click on those dots and you should have a rename button that shows up. When you click on that, then you can type in your first and last name. And then I think hit enter or submit, and then your name should change and everything should be good. Once I'm done doing my piece, I'll be off screen, but I'll still be here and you can chat at me through the chat box if you're still having issues, and I can help you that way. Your chat box, you'll find it at the bottom of your screen amongst all of the different icons, basically in the middle. If you click your chat box, it will launch the box for you on your screen. It automatically defaults to going to everybody in the session. So if you click on the little down arrow next to where it says everyone, you can choose my name, CPA host Amy, and then you can send me a private message and I'll help you with any issues that you might have, technically speaking, in the background. I'd ask you to keep yourselves on mute for the rest of the session, and that will cut down on all the background noise that's happening in your homes or in your office. The question and answer period will be at the end of the session. So Michelle will give her whole presentation, and then Patty Towler will moderate the Q&A at the end of the session. So we ask you to put any questions you may have for Michelle in that chat box. So again, to launch your chat box, click on the chat icon at the bottom of your video screen, and then you can put your questions in there. So just make sure when you put your question in there that it is saying that it's going to everyone, and that's how Patty will be able to pick it up. So that's it for me. There's still lots of people coming in, but we'll get started. I'm going to stop sharing my screen and pass the floor over to Patty Towler.
Thanks, Amy. Shall we wait just a moment? We're still about 70 people shy. Or do you want to get started?
I would say you should probably get started.
Okay. Okay, well, welcome everyone. My name is Patty Towler, and I'm the President and CEO of CPA Nova Scotia. And it's my pleasure to introduce Michele Wood-Tweel. Michele is known to many of you already. She's held leadership roles in the profession for many years and is from Nova Scotia, so is familiar to lots of you. For the last 6 years or so, Michele has been Vice President of Regulatory Affairs for CPA Canada. And in that role, she's really acquired quite an expertise in the area of anti-money laundering. Most recently, just a few weeks ago, Michele presented evidence on behalf of the profession at the Cullen Commission in British Columbia, which is looking into the issue of money laundering in that province. But as I'm sure Michele will advise us, money laundering is not limited to those areas that we used to think of as hotspots, but in fact is pertinent to all CPAs right across the country. So Michele, it's a pleasure to have you. We really appreciate you sharing your time with us and your expertise, and turn it over to you. And sorry, just before I do, Michele, I'll just say on the questions, beg your pardon, I'll be watching the chat box. Please type in your questions. For the sake of time, I'll articulate all of the questions to Michele. We won't open microphones for individual questions, so please type them in. And if there's duplicates, I'll aggregate them as we go and so forth, but that will come at the end. Thanks, Michele.
Thanks very much. And thank you, first of all, to CPA Nova Scotia for organizing the event today. And it's a pleasure to be here. And thank you to all of you for investing some time to engage in this update and to learn more about the journey that Canada is on with respect to anti-money laundering and our regime. And hopefully we'll be able to demonstrate through the update here today that there is a lot taking place and there's a lot to be aware of and to keep track of as we go forward. It's been a particular area of focus for CPA Canada, and I'll explain that as I do go through the presentation here today with respect to our participation in federal government committees that are concerned with the anti-money laundering and terrorist financing regime. And as well for me personally, it's been quite an area of activity and interest where for the last 3.5 years working on some of those committees, I've really been amazed at the amount of focus and change that is occurring in this space. I think it's good for Canada, but there's certainly a lot to keep track of, and hopefully we'll be able to illuminate some of that for you here today as we go through the information. So speaking of which, let's have a look at the topics that I'm hoping to cover off here today for you. First of all, talk a little bit about the strengthening of Canada's anti-money laundering and terrorist financing regime, and I'll provide you with some background as to why that's happening and some information around what it means to our country, as well as some context that will help you appreciate the importance of this. I'll also talk about the recent activity and developments of interest that have occurred in the period of 2016 to 2020. The regime's been around for a couple of decades now, but there has been a tremendous amount of activity in this time frame of 2016 to the current day. Also talk a little bit about beneficial ownership, which is much to do with respect to anti-money laundering, but it also relates to other types of criminal activity such as tax evasion, so we'll refer to that. And we'll look at some amendments that have been made to the Proceeds of Crime, Money Laundering, Terrorist Financing Act regulations, both in 2019 and in 2020, with many of those changes taking effect on June 1st, 2021. And I'll also point you in the direction of some resources with respect to the legislation, the regulations, and also at Fintrac, which is the Financial Intelligence Unit in Canada with respect to the regime. And make some comments regarding COVID-19. And the pandemic, of course, affects everybody and everything everywhere. And not but least, it also affects those who have illicit objectives and what they're trying to do currently in this pandemic environment. So we'll speak about the money laundering and terrorist financing risks that have changed or elevated through the COVID-19 time period. So with that, some closing thoughts at the end and a brief Q&A to the extent that we can certainly fit that in the time frame. So let me provide, as I mentioned, some background and some context for the strengthening of Canada's regime. And I say that in respect of the fact that I'm sure that some of you on this meeting call are not too familiar with the AML regime in Canada, while others may have in-depth experience. So I'll be trying to speak to a middle ground to bring some of you along in understanding what this is all about, and for others, just highlighting perhaps the vision or the view that I've had for the last few years and what has been taking place in Canada, so that you can put it together in context and have a good understanding of the momentum of the changes that are happening. So first of all, with respect to strengthening Canada's AML-TF regime, what I would say is that a lot of what we're talking about today was identified in the Financial Action Task Force Mutual Evaluation Report on Canada back in 2016. So FATF, as it's affectionately called with its acronym, is a global money laundering and terrorist financing watchdog, and it's an intergovernmental body that Canada was one of the countries in founding, and it sets essentially international standards which are made by way of recommendation, and then it is to the countries to take those recommendations and to context of their jurisdictional makeup in terms of legislation, regulation, professions, etc., and to decide which ones make sense and how they should be constructed within a regime that can be effective in the particular jurisdiction. One of the other things that happens under FATF's watch is that there are these mutual evaluations done of countries to see how they are complying with the recommendations and also to look at the effectiveness of their regimes. So that last review of Canada in 2016 noted several deficiencies. And interesting for me, when I first began on this journey, I did note that some of them were directed at the accounting profession. So we'll speak to that as we go through the information here today, where some of the changes that have been made address some of those places where we were considered to be deficient with respect to international standards. The other thing that I think is a little bit surprising, and maybe you will too, is just to understand that Canada's reputation in an international respect is at risk with respect to money laundering. So, for example, the US State Department's report on money laundering has identified Canada as a major money laundering jurisdiction. And another report back in July of 2020, the Basel AML Index, and that being an independent non-governmental entity attached to Basel University, they rank the risk for money laundering within countries, and Canada placed 94th out of 141, where it's better to be at the bottom than at the top because of its risk rated. So we're in the right end of that half, if you will, but there's plenty of room for improvement. So in the eyes of the world, Canada is at risk for being taken advantage of with respect to increasing amounts of money laundering. It's already happening here, coast to coast. We'll talk about that. But the risks are showing us that there's potentially more that could happen in our country, and this is why we all have to be paying attention at this time specifically to the changes that are underway to protect our economy and our society. So just as context, some observations to help understand the nature of money laundering and the types of things that are happening in Canada. Money laundering is global, and just like business is global, it's global, and money moves around the globe, and it moves quickly, especially with the types of technology involved in business today. So the other thing that might be surprising is that we do have these quote unquote professional launderers. And these folks are literally scanning the globe and looking for the gaps that they can find within systems in place to be able to launder money, launder their proceeds of crime. And they're also looking for stable economies and financial systems. And so this is almost counterintuitive when you think about it, because what they are looking for is they're looking for a stable country like Canada, politically stable, as well as having a strong financial system, because that's where they'd actually like to take their money to launder it and in fact hold their money in an economy in a country like that. And I say it's counterintuitive because you think they would go to where the controls are least, as opposed to where there are many controls with respect to the financial system, but that's not the case. The money that they've earned illegally, they want to protect. And so consequently, they are attracted to the stable economies and financial systems of the world. And certainly Canada is one of those countries that is in the crosshairs of folks who are professional money launderers. And that's one of the reasons why we're at risk in the future, currently and in the future. So money launderers also can involve other unwitting individuals that are not aware, including professionals, of how they might be being used in what may be a series of events or transactions that are designed to conceal the illicit intent. So this is the part where I suggest that we all have to be aware that this is around us, and we have to use our professional skepticism to ask questions around transactions or around ways in which money is moved or products or goods are moved, because there may be a reason to it and it may all be bad news at the end of it. So we have to understand who we're dealing with and why the transaction is occurring, what's the transaction's purpose, and be careful not to get involved in transactions that are simply meant to conceal the illicit intent. And money laundering is a crime that is always predicated on top of something else. There's a crime underneath it. And we'll talk about what some of those crimes are. But money laundering itself is illegal, and it is on top of some other form of crime that has already been committed that also is illegal. So it is bad news all around. None of it is good. And people can unknowingly become involved in these types of complex transactions, for example, or sophisticated transactions where they may not be aware. And that is something that we certainly have to be very careful of as professionals. Another thing that I noted early on in my journey on this is that internationally it's said that 70% of money laundering utilizes corporations. And I think that's relevant to us as professionals, because if you think about companies and corporations and you think about the professions, the two professions in particular that work most with corporations and their owners, et cetera, tends to be lawyers and accountants. So if 70% of the money laundering that is happening is using corporations, I think we all have to be paying attention to corporate entities. And one of the things we will talk about here today is beneficial ownership. And that is, of course, why corporations are coming clearly into focus with respect to new beneficial ownership requirements, because we have to know who's behind the corporate structure. The confidentiality and the secrecy that has been attracted to many people to invest or to maintain assets behind corporate veils here in Canada is something that has also been attractive to those with illicit objectives. So it has to be addressed in the form of beneficial ownership, and that is the movement you will see that is taking place right across the country. Now, I mentioned Fintrac a few minutes ago, and that is the Financial Intelligence Unit in Canada, the supervisor for the AML regime. And in its most recent annual report, it indicates that most disclosure packages to law enforcement with respect to the information that Fintrac receives, which rises to a certain level by which then they place it on the hands of law enforcement or other entities in Canada to investigate, they say that those packages were regarding Ontario, Quebec, and British Columbia. And there's some movement year to year. The prior year, Alberta would have been in there as an example. But what we do know as well is that this is taking place coast to coast. So if you watch for cases that are being reported, there isn't a province that I have identified, certainly in the last 3.5 years, that hasn't been impacted by these types of activities, either by the predicate crimes that are in place or whether it's money laundering itself. It's right across the country. We all have to know it's in our midst. And with respect to those underlying offenses or predicate crimes, Fintrac reports that the top 3 in its most recent annual report were 31% related to drugs, 30% related to fraud, and 14% to tax evasion. You'll also see references in my presentation that relate to human trafficking. We know that child pornography, as an example, is a massive uptick under COVID, especially under this pandemic, which is heinous, obviously. And we know that the United States claims that one of the other areas of crime that is occurring in Canada is the illegal transfer in of arms. So there's a lot happening in our country, whether we realize it or not. There are things occurring that we should be aware of. So just like to take you on a little bit of a road journey with me around some of the recent activity and the developments of interest that have occurred with respect to the regime. And some of this, I think, will help you understand why the changes are necessary, as well as the types of things that we all could stand to be aware of with respect to money laundering and terrorist financing in Canada. I'll go back to that 2016 Fad of Report just for a moment. And so again, that was an international review that was done of Canada's regime to look at how we have done in implementing international standards. And there were several deficiencies that were identified, and one of them certainly was beneficial ownership. So the idea that you could have a company, a private company in Canada, where it's very difficult, maybe even in some cases impossible, to determine who ultimately stands behind that company, either in terms of share ownership or control of the company, was identified as a significant weakness in Canada's regime. Another one is the fact that lawyers and law firms in Canada are not reporting entities under Canada's regime. They are in other countries, but in Canada it's a constitutional issue, and it appeared before the Supreme Court in 2015 with a decision that kept lawyers and law firms out of the regime and reporting to Fintrac, and it's based largely to relation to privilege with respect to solicitor-client privilege as to why the Supreme Court decided the way that it did. So that was an issue identified internationally in 2016. And the other thing that happened was that there were additional requirements in the international regime that were suggested should be applied to more sectors in Canada, and that included accountants for some of them. And we'll speak to those a little bit later in the presentation. I'll give you some insight as to what those types of requirements are. Also in this period of 2016 to 2017, the federal government created public-private sector committees, and these were formed by the Federal Department of Finance, which has responsibility for the AML legislation. And 3 of them that we participate on actively at CPA Canada are the Umbrella Committee, which is the Advisory Committee on MLTF, which is affectionately called ACMLTF. And on ACMLTIF, the nature of the committee work there is strategic in nature. It is looking at Canada's regime and determining how the regime is functioning and where opportunities for improvements might lie, or where new risks are occurring. And the people that are sitting around that table are obviously members of the federal government, that being the public sector piece, and private entity pieces as players that are in the regime, whether it be financial institutions or even ourselves, actively at that table and part of these conversations. There is also a legislation and regulations subcommittee, and that committee very seriously looks at the legislation itself and the regulation requirements, and also thinks about the risks and opportunities to be addressed through legislation and regulation. It's been a very active subcommittee in past years because of the regulatory changes that have occurred. And then there is a different group, Guidance and Policy and Interpretation Working Group, that specifically works with Fintrac, the Financial Intelligence Unit and supervisor of the regime, around the guidance that Fintrac produces for all to see publicly on its website, around the policy and interpretation that it makes of the legislation and of the regulations. All of these places that I've just referred to have been extremely busy since the summer of 2017. It has been dramatic in terms of the pace of change and the, like I said, focus on the regime and the improvement and strengthening of the regime. So one of the things to that end that government did was in 2018, they issued a consultation paper to which it was public and to which CPA Canada certainly responded. And this consultation paper is considered to be a green paper. And what government meant by that is the fact that the regime itself is going to need evolving changes over time to deal with the risks that are coming forward, that are evolving. And consequently, the consultation paper was not meant to be sort of a one study purpose and you put it on a shelf and it's done. It's more intended to be more of a green or evergreen kind of issue where it will be looked at again and there will be changes. So the changes that have already occurred within the system are not the only changes that are going to occur. There will be more. Don't know when, don't know what changes, but there will be more. It's an evolving scenario and it's quite fluid looking at the regime's future. So we'll see more activity and we'll talk about some of those things today that could be changes ahead. But in that paper back in 2018, it did signal the change such as beneficial ownership and the fact that Canada needed to address the opaque nature of private corporate ownership in Canada. And that was one of the things certainly that was identified in that paper. We spoke to it, and you will see coming down through many provinces and also federally that changes are either afoot or in place. And the other thing that happened in 2018 was that the Act itself, the Proceeds of Crime, Money Laundering and Terrorist Financing Act, has to be reviewed every 5 years. And so Parliament created a committee to review that and undertook a review. And the result of the review was to make 32 recommendations as to changes to the legislation. And some were applicable to the accounting profession. And one that I highlight for you, which is probably the most complicated one, if it were to be ever put in place, which is to implement a body similar to the UK's Office of Professional Body Anti-Money Laundering Supervision. And again, affectionately called OPBAS by way of acronym. And the idea would be a supervisory body to ensure that Canada's self-regulated professions, largely lawyers and accountants, are in fact complying with the regime. However, one of the issues that you should know about that is that the UK regime is quite different than Canada's regime. In the UK, the self-regulating professions actually have responsibility for ensuring compliance, whereas in Canada, the compliance and the supervision of the regime is actually carried out by Fintrac. So the need for this oversight body is really quite different in Canada. It's not the same as the UK, but nonetheless, it was the recommendation that was made by the Parliamentary Review Committee. So we will see in the future, I suppose, what, if anything, happens with that. 2018 was the same year as well that the federal and provincial finance ministers publicly addressed beneficial ownership, the need for increased transparency in private corporations, and also started to make commitments to see that through. So it was another watershed year in relation to the development of the regime and also the developing of the focus upon what kinds of changes were in fact going to follow. In 2019, we received significant changes to regulations. So the regulations attached to the legislation were in fact significantly overhauled. And this was in part due to style of writing of regulations, but it also was absolute changes to regulations and the requirements. Most changes effective June 1st, 2021, although some came into effect earlier and on a staggered basis. As well, in 2019, the Canada Business Corporation Act required private companies to keep beneficial ownership registers with a direct and potential impact to CPAs in a variety of roles. And I'll speak more to this particular change in a few minutes' time. But depending on where you work, or if you're an owner, or if you sit on a board, or if you work in public practice advising private companies, under the Canada Business Corporation Act, there are these requirements that exist now, and we'll talk about those. Similarly, in 2019, FATF was doing its own thing and working hard and updated the risk-based approach guidance for accountants internationally. And this document, although in the past it's been harder to relate it to Canada simply because Canada's system is more sculpted than the international regime is, it is some of the more recent changes are bringing this risk-based approach guidance that was issued by FATF a little more into line with where we are going to be in Canada after June 1st of 2021. And as well, in 2019, BC commissioned 4 reports dealing with money laundering, and the result of that was launched the Cullen Commission of Public Inquiry to review money laundering, to make findings of fact and recommendations for the sectors involved in potentially money laundering activities in BC, and that also included the accounting profession. So I'll speak more about the Cullen Commission in a few minutes' time. 2021, bringing us to the current, the momentum building for the beneficial ownership register requirements for all private companies, which frankly is a really significant change for corporate Canada, has continued to build. And you are seeing now that legislation is either in place operating or to put in place or is being considered right across the country. And this is a significant change now with respect to what private companies have to maintain as information. And that information has to be available pursuant to the legislation by which it has been required. And that may be different in some provinces versus others, but generally speaking, a lot of them are consistent. I believe Nova Scotia will move ahead consistent with the types of requirements that the Canada Business Corporation Act requires. The other thing that is happening, if you consider the beneficial ownership register requirement as kind of phase 1 of beneficial ownership, then phase 2 is to think about whether or not Canada will undertake a publicly accessible register. And if you look at other jurisdictions in the world, you will find several of them have operating publicly accessible registries. So for example, the UK, Europe, you can go and you can look at who owns a private company in those jurisdictions, and depending on where you're standing exactly, you can find out varying amounts of information as a member of the public. So one of the things that Canada has to determine and has been consulting on, and we participated in a federal consultation in 2020 on this point, is if the registry in Canada, and there may be one or there may be more than one, should it be fully publicly accessible, and what kind of information should be accessible to the public at large? How much information should be available to law enforcement and other authorities to investigate? And what kinds of information, for example, should be available to accountants and accounting firms who are potentially firms and individuals that may be actual reporting entities under the AML regime? So again, CPA Canada participated in that consultation with the federal government. BC also had a similar consultation process undertaken, as did Quebec, and Quebec as a province has actually moved forward with changes to its Quebec Enterprise Registry that would see new publicly accessible search functions available, and they're moving fastest towards this publicly accessible registry at this time in Canada. But it is very much a developing issue and something that we expect Canada to move towards as other jurisdictions have. And that will be relevant in terms of knowing who you're doing business with. So it has has a purpose for business. If business can access this information, knowing who your business partners are, it certainly enables law enforcement and other authorities to have information to investigate crime so that it is in a centralized place and of a consistent fashion so that they can utilize that information, and it will make a lot of enforcement activities more streamlined for authorities. So there's a lot of positive that can come out of a public registry. There are also things that have to be balanced against it, which include things like the privacy rights of Canadians in terms of how much information is too much information. So we very much spoke about that in the submission to the federal government when we were in the consulting process. So about the Cullen Commission, that was percolating in the background for sure. Lots of good folks in BC were hard at work at this, including the counsel for the commission, and of course, Justice Cullen, who oversees the commission itself. And the hearings, the formal hearings began in February of 2020. They continued in May, June, and in a COVID environment, of course, became web-enabled for the entire process since. And they reconvened in October 2020 and will go through till May 2021, which is when the closing hearings are anticipated to occur. Now, you'll remember that I said that one of the sectors within the terms of reference of the Cullen Commission is the accounting profession. And on January 12th of this year, CPA BC was in front of the commission and testified. And on January 13th, CPA Canada was in front of the commission and testified. And it was a very broad and a very deep analysis by the Commission Counsel of the profession, in my view. The 12th, as CPA BC appeared, a lot of it was to do with the regulation of the profession, all of the requirements that we know about, everything from continuing professional development requirements to practice inspection to the conduct and discipline process. All of it was under the lens of the commission, and examination was taking place at that time of the staff members from CPA BC. And when CPA Canada appeared on January 13th, the nature of the conversation was somewhat different because it wasn't focused so much on provincial regulation in BC as it was the prior day, but it was looking more towards the regime itself, the work that CPA Canada does with the federal government, and as well comparing the requirements of accountants under Canada's regime versus other jurisdictions, because there are differences. Canada's regime is very sculpted with respect to its requirements for accountants, and part of it was trying to illuminate for Commission Counsel why those differences might exist in Canada, and also to explain other parts of the nature of the work that we do, such as audits, and the fact that audits do not involve financial intermediation, etc., so that the Commission and also the Justice could understand the nature of the work that we do and when it is that we need to consider reporting under the regime. And again, not to be outdone by all of this, further regulations were changed in 2020, and with the majority of those changes also becoming effective on June 1st, 2021, some of them specifically expanding the responsibilities under the regime for accountants and accounting firms that are applicable to, that have to comply with the regime. So let's just take a look now quickly at the beneficial ownership piece. And so interestingly, this is not part of the Proceeds of Crime and Money Laundering and Terrorist Financing Act. These are discrete pieces of legislation across the country because most of the requirements for private companies are sitting within the provinces, and federally there is the Canada Business Corporation Act. So for any of you that are not entirely familiar with what beneficial ownership is about, it is trying to determine who really owns and or controls an asset or an entity. And it means looking through the share structure, looking through the corporate structure, looking through trust structures if they exist, and looking for ultimate control of an entity or an asset that may not be by way of ownership. It may be controlled by debt covenants, or it may be controlled by relationships, looking at who controls that asset or entity in real terms, and also looking behind nominees if they are in place. And basically the point is that not easily knowing who really owns or controls an asset or an entity allows for privacy or secrecy that may be law-abiding and legitimate. As we know, and we've had that pleasure in Canada for many, many years, probably for most of us for our entire careers, this has never been an issue. But the problem is that they also may not be for legitimate reasons at all. In fact, it may be for illicit objectives. And that is why beneficial ownership is now becoming the priority in terms of saying corporate transparency in Canada for private companies has to be increased. So on that note, we've already stated the 2016 Fad of Report indicated concerns. It was a very specific and a serious concern for Canada's regime that we lacked beneficial ownership information, and that our lack of transparency was being used by criminals to evade tax and launder dirty money from crimes including human trafficking, illicit drugs, and firearms. And if you recall back to that early point that I made, that internationally it's stated that 70% of money is laundered using corporations, that shows you that if you have an opaque system of beneficial ownership for companies, you're going to be a destination hotspot for money launderers around the world, because professional money launderers, like we already explained, what they're looking for is they're looking for the gaps in the system. And if they can hide money here easier than they can somewhere else, they're coming here. And this is one of the reasons why Canada is making the changes that it is making. So the lack of transparency has created a risk to our society, to our businesses, to our global reputation, and also to our international partners. And that's another important part of this story. With money laundering and business in general being global, it means that the problems are also global. And so we have to be able to share information with international partners. And in fact, we have agreements to this effect as our country to share information with other countries. The problem is if you don't have access to the information, you can't share it. So Canada has been at a deficient end of this stick because they can obtain information from some other countries, whereas they can't give it back. And that's not consistent with the agreements that we have in place. We need to be able to share information with our international partners in order to solve the issue of international money laundering. So what does increased beneficial ownership transparency do? It allows authorities to identify and charge for the crimes committed. It allows for authorities and others that are participating in the regime to prevent crime. So think about the financial institutions. If the financial institutions are aware of the beneficial owners of companies, they're required actually to confirm the beneficial ownership. Then they can identify where there could be crime occurring by way of reporting to Fintrac. The information then goes to law enforcement, and in fact, crime could be prevented. That's the entire theory of the system. But it also allows for authorities and others, such as those participating in the regime, to prevent the proliferation of dirty money in a financial system and in our economy, which ultimately is bad for society. And it also allows our country to join the other international jurisdictions in the prevention of money laundering, in the detection of it when it does occur, and also in the prosecution of crimes that are taking place. So it is very important, and it is why the federal and the provincial governments are focusing upon increased transparency for companies. So I'll just briefly mention, using the Canada Business Corporations Act, the type of requirements that we're seeing there, with most of the provinces having harmonized to these federal requirements. And that is that CBCA companies were required as of June 13th, 2019 to create and maintain a list of individuals with significant control, where significant control is defined, and it includes individuals that have 25% of the voting or fair market value of shares held directly or indirectly by an individual. There are other components of what a significant control person is, because as I mentioned, it may not even be by way of share ownership. It could be by way of debt covenants or by actual relationship that they have control over an entity. But there's a lot in that 25% if you look at it. The voting share part might not be too tricky, but the fair market value part is, when you consider that this is directed towards private companies. And so we know that fair market value is typically not derived with respect to private companies unless there is something happening, like a transaction is underway or something of that nature. So it is going to be something that folks are going to have to watch for in relation to either their employers or the boards they sit on or the organizations that they advise. Simply because if you've got changing share structures or changing fair market values of the entity, and the share structure could reflect that fair market value, then you may have ongoing needs to value and look at who is a significant a person with significant control. Some companies that are very stable, right, that have a very small shareholding where one person owns the company or two people own the company from sort of the beginning to the end. It's all very stable, not too much work there probably to go on, but other companies that have complex share structures or changing structures may in fact have a lot of responsibility with respect to these new requirements. There are very significant penalties for non-compliance and can include incarceration. So again, depending on a CPA's role with respect to an entity, whether they they are an employee, whether they're a CFO, whether they sit on the board, whether they own it. You have to know what these requirements are, and you also have to ensure that the entity is complying appropriately. The information is available to law enforcement, and depending on the jurisdiction, may be available to others such as creditors, but it all depends on the jurisdiction that you're standing in. The other thing that's happening with respect to beneficial ownership is within the Tax Act, wherein in 2021 tax years for trusts, there are new requirements, including the need to detail the identities of beneficiaries, settlers, and trustees. There are other requirements. That's just one of them that is taking place. But again, this is all in an effort to identify and to create greater transparency as to the beneficial owners of assets that are held by way of trusts. And as mentioned, provincial, legislative, and consultative developments are ongoing regarding beneficial ownership, and they're in different places right across the country. So you have to be aware of where the company that you're dealing with or a part of was formed and what legislation is prevailing upon its requirements, and be sure to understand what is required of them and by when. So the new rules are expected to improve corporate transparency, to help combat money laundering and tax evasion. The requirements do have implications for CPAs who own, govern, or operate a private company. Members in public practice and industry need to be aware. So that's something that obviously is very important for all of us to take note of. And as well, this potential for information to become publicly accessible is a potential near-term development. So this is one of those watch this space situations. You've got to watch for the development of this. This could be happening in the near term, and we will all have to pay attention as to how the beneficial ownership publicly accessible registry, if it is formed in Canada, what it includes, who can access what information, etc. It will be important to all of us as practitioners or as members, but it also will be important, obviously, to the clients and the employers that we all work with. On that note, as Canada was trying to consult on this issue and to determine what is important with respect to a publicly accessible registry, I should say, CPA Canada undertook research with the International Federation of Accountants, and there is a report that we generated that looks at best practices, if you will, as well as lessons learned in jurisdictions around the world that had already implemented a public access registry. There definitely have been learnings. You know, one small example for it is the UK, and under the Companies House in the UK, they created a publicly accessible register. It's amazing the amount of information that you can find on the registry, but one of the issues is that there is no requirement to validate the information. So unfortunately, it becomes unreliable over time. So that's one of the lessons learned that we've pointed out for Canada's sake, to say that as you go about this, make sure that we're taking in the best practices globally, and also that we're looking for the areas that could have been better in other jurisdictions' registries as they were involved and developed. Now just briefly touch on some amendments to the PCMLTFA regulations that have occurred in the recent years, and just speak a little bit to those, but there's so much, there's just so much more information, frankly, that one needs to obtain. You'll have to go to other resources to find it that are available at places like Fintrac as the supervisor of the regime as a start, and also the legislation and the regulations themselves. So back in July 2019, the wide-ranging amendments were made to the PCMLTFA, and most changes there are going to be effective June 1st, 2021. And then in June 2020, some additional specific amendments that weren't made back in 2019 were made. And most of those as well are going to be effective on June 1st, 2021. The amendments in Canada's regime, more with international standards set by FATF, they certainly do address some of those issues identified by the FATF review of 2016. They also address some of the issues identified even by the Parliamentary Review Committee of 2018. And it tries to level the playing field of reporting entities and strengthen the regime. And I'll refer to a couple of circumstances like that that apply to accountants in a few minutes' time. So again, highlighting the fact for you that the Federal Department of Finance has indicated that the regime itself must be continually updated to respond to the emerging risks and evolving international standards. So even though these amendments are just coming into effect in June, I would tell you, based on my experience, that the regime isn't going to stop changing. It's going to continue to change as it needs to address the issues. So one of the examples that we've seen in these recent amendments was certainly looking at virtual currency. This is, a new environmental piece that has happened within the world. The regime needed to come up to speed with virtual currency as currency itself, but also with respect to the entities that work in virtual currency and create requirements for them as well. That's just one small example of, the modernization of the regulations, as well as the changing landscape in which this regime must operate, both in Canada and in being able to supply information to international partners. So the types of things that have been included in the regime, and like I said, there are many, so I'm just going to give you a couple seconds on each one here, and there's many, many more. Suspicious transaction reports. If you are required to file an STR, the timing for filing an STR has been changed to as soon as practicable. Previously, it was 30 days, within 30 days. And that was said by the international community to be too long and too lax. And so the move practicable is a matter of judgment and best effort, and it is something that Fintrac, as the supervisor of the regime, could weigh in on if you have apparently not moved as quickly as you should have with respect to filing an STR. Now, the things that I'm referring to here with respect to the requirements under the regime, they relate to accountants engaging in what we call triggering activities. In other words, accountants or accounting firms have done something like taken possession of the assets or the cash or the securities of another person, and they are doing something with it. So they're transferring it, they're investing it, they're spending it, they're using that money on behalf of someone else. That's a triggering activity, and if you have something that gives reasonable grounds for suspicion, then you have to look at filing a suspicious transaction report. If you're not doing any of those things that are triggering activities, then you wouldn't have this responsibility. So again, it's a very sculpted requirement. You need to understand and be aware of the requirements as to when they apply to accountants and accounting firms. Lots of good information on the Fintrac website directed specifically to accountants and accounting firms. So I would encourage you to look there in terms of determining whether you have responsibilities under the regime. And if you do, then there are several responsibilities under the regime. So you will have to follow the trail of those responsibilities as they exist. Large cash transactions made over a 24-hour period, now in aggregate, required to report when they exceed $10,000 or more. So if it's foreign currency, you have to exchange it back, and if it exceeds 10,000 Canadian, you're in, and you can't have these disparate individual transactions occurring. If they all aggregate over 24 hours into that $10,000 or more, they have to be reported. You can't get around the rules by the illegal folks trying to get away with it. You'd have to report. And as I mentioned, virtual currency, numerous changes with respect to VC, including VC dealers now needing to be registered with Fintrac, and a number of specific requirements that they have to undertake. So if you're involved in that industry at all, much to know there with respect to new requirements. Identification, there are changes to modernize or make contemporary the regime. So documentation used to verify ID previously was required to be original, valid, and current. And as an example now, it is changed to authentic, valid, and current to allow for electronic means. There are expanded obligations for accountants and accounting firms that do have requirements to comply under the regime to ascertain and take reasonable measures to confirm the beneficial ownership information when you're required to verify the identity of an entity. So if you have ID requirements under the regime, then you must take the further step now of also obtaining beneficial ownership information. This is the type of requirement that has been applicable to many reporting entities internationally and also in Canada, such as financial institutions. It was not applicable to accountants, it was not applicable to real estate brokers, etc. It now is, because that's the expansion of the regulations that will come into effect on June 1st, 2021. As well, another one that is sort of taking across the platform and making it more consistent is the obligation of accountants to identify whether they are dealing with politically exposed persons or heads of international organizations. These folks are all assessed at having higher risk with respect to money laundering potential. So individuals, for example, the International Olympic Committee, elected peoples, mayors, provincial people, MPs, federally, et cetera, all those folks are identified as being greater risk for money laundering simply because of the work they do and the people that they're exposed to globally. So talking about the resources that are available and the ones that are the most direct to look at, the legislation itself is the Proceeds of Crime, Money Laundering, Terrorist Financing Act and its associated regulations. There's lots there, it's hundreds of pages. Then there is the Fintrac guidance available on the website. And as I've mentioned there, Fintrac produces guidance that is general in nature, but also specific to reporting sectors. So when you go to Fintrac, you will find information that is about the regime in general. And then if you look under the drop-down menu bars, you can very often find specific information related to accountants and accounting firms because we are a reporting entity sector. So there's additional information that you can seek out with regards to the profession there. As well, obviously, the profession is doing its part. The AML guide that we've made available to members for many years is being updated and will be available later this spring. Webinars are being created, and in addition to sessions like this, written material is also appearing in Pivot Magazine and also through other communication channels in member news to the members across the country. So I'd just like to say a few words now about COVID-19. And what this means to all of us with respect to money laundering and terrorist financing risks, which are higher and probably will continue throughout the pandemic period. And then I guess we'll wait to see if they decrease when life goes back to normal, whatever normal is and whenever that takes place. So it's fair to say the pandemic's disruptive force has interrupted and changed the plans of those with money laundering and terrorist financing objectives, just like it's changed the course for everybody. FATF, the international standard setter, reports that increased risks and threats for money laundering and terrorist financing are expected to continue in the pandemic period, and that there are new vulnerabilities that have been created through this disruption and through the health and the economic challenges that have faced the entire world. So those with money laundering and terrorist financing objectives are finding new opportunities and ways in which to launder the funds that they have, and that's part of what we need to be aware of. So the examples of potential risks that have occurred during this COVID period, they include the laundering of ill-gotten funds from government pandemic support programs. And of course, the stories of that taking place are worldwide at this point. And as those monies are fraudulently obtained, they have to be cleaned and laundered. And that is one of the potential risks to the financial system and to the economy. As well, this may not have occurred to you, but as soon as the pandemic hit, borders were closed, travel restrictions were in place, and the cash mules, as they're called, the individuals that would track that cash across borders were held back. And that meant that the illegal operators were looking for places to put that money. And one of the ways that they were doing it was redeploying it through otherwise legitimate businesses that had suffered severe economic challenges, could not get bona fide financing, and were willing to accept criminal proceeds. That's another way in which money can be laundered through legitimate businesses in countries. And laundering of ill-gotten funds obtained through increased cyber activities such as identity theft, business email compromise, et cetera. We know that cyber activity has increased dramatically during the pandemic. And of course, all of the proceeds associated with those activities are as well illegal funds and have to be laundered. So that's another risk that has commensurately increased since the pandemic began. So the new global, jurisdictional, and sector MLTF risks that have occurred during this pandemic period require us to be aware of them and also to have understanding of what is taking place and could affect us, our organizations, or our clients. And there are some places that you can look to in terms of information specific to Canada. Fintrac did release a special bulletin on COVID-19, the trends in money laundering and fraud that were very early on already being seen in Canada. And as well, FATF internationally did something along the same lines, and Interpol did as well internationally from a policing and enforcement perspective as to the risks that were occurring. And we did, with the International Ethics Standards Board of Accountants, CPA Canada released a COVID staff alert just to bring awareness to professional accountants around the world that there are evolving risks associated with money laundering right now, but they are increased risks. So to be aware and be skeptical of the types of transactions that could be occurring that you need to identify to stay clear of, or if you have reporting responsibility with respect to them, to comply with the law. So in terms of closing thoughts, it's a busy journey, and we are on a journey. So I hope that what I've been able to do here today for you is to give you some insight into the efforts and to the activities taking place in Canada with respect to money laundering, terrorist financing, and strengthening the regime. It is an ongoing journey. We will wait with great interest the completion of the Cullen Commission in British Columbia by participating in the closing hearings in May, and then to await Justice Cullen's report, which will probably be issued late spring into summer. It is reviewing and to make recommendations with respect to the sectors reviewed. So the accounting profession can anticipate that some recommendations may be directed at it, and we will obviously look at those and take those under our advisement in what we need to do with respect to strengthening our processes or what have you within the profession. As well, we'll continue our work with the federal government, actively contributing to the strengthening of Canada's regime, and obviously working towards providing the information to all of you as members to enhance the awareness of the requirements in Canada, and also what you can do to remain safe, keep your organization safe, and keep your clients safe. So thank you very much. I'd be happy to take any questions with any time we have left, and it's been a pleasure being with you here today.
Thanks so much, Michele. That's highly informative and sobering at the same time. So we really appreciate that. We do have two questions. The first is with respect to cryptocurrency, and you certainly did mention Fintrac in that regard. But the question is, what is being done or what should be done with respect to the facilitation of money laundering through cryptocurrency, including Bitcoin?
Yeah, you're probably way outside of my pay grade at this point in terms of the nature of that conversation, but I will just say it is worldwide on the radar, of course. So it is happening in conversations amongst law enforcement, amongst the anti-money laundering regime itself. FATF is involved. Countries are working together. Canada is certainly on this, whether it be the Department of Finance, the Bank of Canada, whether it be CRA, whether it be the Fintrac folks. Everybody collectively is aware of the risks associated with virtual currency, and in fact, the risk that virtual currencies are particularly vulnerable with respect to global money laundering. So how it's being handled and exactly what all movements are, I'm not the best person to be able to answer that, but certainly there are changes that have occurred within those regulations by Fintrac that are in effect, and I'm sure that there will be more in the future as well regarding virtual currencies.
Okay, thanks very much. And last question, with respect to current tax structure and completing T2s for the corporate tax returns, there's currently a requirement to disclose shareholders with more than 10% ownership interest. But then another participant replied to that question saying, well, this is quite different than beneficial ownership. So I think it raises the question of what is beneficial ownership and the nature of it versus concepts we might be more familiar with, like shareholding.
Right, it does, because beneficial ownership is broader, right? And in the development of what is significant control, which is really, that's part of where the difference is occurring right off the bat. The register requirements are focusing on individuals with significant control, and significant control is not defined only by shareholding. When you do look at shareholding, the requirement, for example, in the CBCA, and I believe under Nova Scotia, because it has harmonized with the federal, it's looking at shareholding, and it's also looking at fair market value. So there's a two-pronged test there regarding significant control and what is it, but it doesn't stop there, because significant control can be deployed by not even having a shareholding. So as I mentioned, it could be through debt covenants, it could be through family relationships, it could be because you happen to be the powerful boss standing behind who may be from organized crime or what have you. So the question that's being asked around individuals of significant control for purposes of putting it down on a register in relation to this beneficial ownership concept is actually broader and more significant than simply talking about a particular number of shares or percentage shareholding.
Wonderful. Thank you again. That's terrific. And I really do appreciate your time and your expertise and your willingness to share that with us. I just remind anyone who called in rather than using a computer, if you would shoot an email to Amy McIsaac at CPA Nova Scotia to let her know the phone number on which you called in so she can credit you with your PD time. And I think everybody else has filled in their full names. If you haven't, please do so, but it looks like that's been done by everyone. So thanks again, Michelle, and thanks to everyone for joining. Really appreciate it.
Thank you to CPANs for organizing. Take care,
Thanks,
everybody.
Bye-bye.